Originating loan transactions is a complex and lengthy process. Often takes extensive relationships and networks to be able to know the right people, and extensive relationships with a lot of people that are advising companies. So we have extensive relationships through corporate advisors, financial services players, banks and others that we work together with to support and provide financing to corporates. And that process generally might take anywhere between 1 year and in excess of 5 years. It really just depends on the nature of the transaction. So it's very rare that you come together and you can't simply just buy and sell an asset over an exchange. And as a result of that, it requires you to be demonstrating to the company that you've got a good understanding of their business. It requires you to be able to have commercial nous in terms of being able to determine what are the key drivers of cash flow and what is the strategic direction of the company. All of those things come together to be able to help you to originate transactions. At the end of it, it's the quality of management. For us, when you're looking to engage a company and look to lend to a company, you're looking for the quality of management. What's the experience? What's the skill set of the people involved? Do they have the right commercial acumen to be able to drive and deliver growth in earnings and really deliver on their strategic intent? And I think a lot of our assessments come down to the quality and strength of management, how well management's organised, and as a result of that, management will have a view in terms of how they want the business to be structured financially. And as a result of that, we then look into the financial aspects of the company and we dig into the financial details. And so often we're privy to private side information. So one of the things that differentiates a private markets lender compared to public securities investors is the access to private information. So we'll have a range of information that is available to us that would not be publicly disclosed to the broader market. We're subject to tight confidentiality restrictions, and so our ability to analyse and assess the risks associated with the companies we lend to is enhanced because we're able to ask detailed questions and seek out the information. And often we look for supporting information. So you might sort of say, look, we're looking at these financials, we want an independent review. So we might have one of the large accounting firms go in and complete a detailed forensic review of the financials and give us a detailed accounting and tax due diligence report. We might have one of the major legal firms go in and do a detailed assessment around the legal risks and the contracts that the company is exposed to, all designed for us to be able to understand the companies that we lend to better so that we can understand what are the risks and then ensure that we've got the appropriate controls and structures in place to mitigate that risk of loss.